Hi, this is John Coumarianos with Mindful Advisory, bringing you a new edition of Driving Returns. This segment's going to be a little bit different in that we won't be talking about portfolios and asset allocation and things like that. If you'll allow me, I'm going to be a little boastful and bring to your attention a book review that I just published in the political economy journal American Affairs. The review is of a book called The Trading Game by someone named Gary Stevenson. Stevenson traded currency swaps for Citigroup in London and in Tokyo after the financial crisis. And his big bet led him to a big insight. The bet was that in the aftermath of the financial crisis in 2008 or after 2008, um, the application of monetary stimulus, the lowering of interest rates, would never really produce the growth that economists at the Fed and other central banks intended. The reason for that was that when you make money available like that, the way the Federal Reserve and other central banks did, um, all you do is put it into the hands of rich people, and rich people don't spend when they have extra money. They don't spend in a way that stimulates the economy the way more middle class and poor people do. And so that was Stevenson's big insight. Everyone on his desk was betting for rates to go up and for the economy to be growing at a higher clip after the financial crisis, because that's what low rates were supposed to do. They were supposed to lead to economic growth and eventually higher rates, which we never saw until the post COVID era when money was given out more directly to people. And so his big bet was that the economy would never recover fully, but also that asset prices would go up. When you give wealthy people a lot of money, they're not going to buy more food or more resources. They're going to buy more assets like homes. They're going to buy stocks, bonds, other financial assets. And that's exactly what happened. We've had a tremendous growth in asset prices, more than we have in the real economy. Stevenson's an interesting guy. He runs now a YouTube channel. He's no longer a trader, at least not a professional trader. He trades his own money. He did so well at Citigroup making this bet that he was able to retire, and now trades his own money and runs a YouTube channel, and he kind of agitates for wealth redistribution and taxing the rich people. I think there's more to the argument about why the economy didn't grow very much over the last 10 years. I think businesses are concentrating much more on profits now and profitability than they are on growth. And I explain a little bit of that in my essay. But Stevenson's book is a really good entry point into understanding what has gone on in the economy for at least the last 15 years, at least since the financial crisis, and maybe longer, maybe since Alan Greenspan took over the Fed, and since monetary stimulus was thought to be the way to engineer what you wanted in the economy. Anyway, hope you check out the review. I think if you're not a subscriber to American Affairs, you get one free article per month. So if you open up my review, that can be your free one for the month. Anyway, this is John Coumarianos for Mindful Advisory and for Driving Returns signing off. If you need to get in touch, our phone number is 201-951-3509, and the website is mindfuladvisory.com. Thanks very much.